newsmakers, and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Bloomberg understands that President Trump is expected to announce a trade agreement with the United Kingdom at a news conference later today. Now, let's get all of the details with Ross Matheson, Bloomberg's EMEA news director. Now, Ross, the rumors running wild. The market is quite excited if we get a trade deal, because this could also be good news for other allies of the U.S. But what do we actually know?
Well, it depends whether you call it a deal, an agreement, or something probably a lot looser than that. This could be quite a flimsy thing. It could be just a framework to set out the parameters for future negotiations. So this is just, in a way, an MOU for how to proceed going forward, and very broad and, covering a range of things, but obviously maybe allowing the UK to get a little bit of tariff relief. But actual proper trade deals, they take years to agree on and then to even implement after that. So this is probably going to be something quite broad. But as you say, the UK then gets first mover advantage of it. It gets to be the very first one that Donald Trump says, here, I've got this arranged and sorted. So good for the UK to be front of the list in a way. Does it set out the parameters for other countries that follow? Again, broad framework agreements, pushing all the hard stuff well down the road.
Yeah, and again, President Trump has also been speaking ahead of the U.S., trade talks with China. It feels like there's a softening of the mood, but I don't know whether that's tangible or there's just a willingness from the Trump administration to maybe try and get something done.
Well, the fact they're meeting in person is significant. We've been wanting to see them sit down and have a conversation. But interestingly, even overnight, they're still disagreeing about who initiated these talks. There's sort of this sideline drama about was it China or the US who reached out first. But by the by, they are going to sit down in Switzerland this weekend. That is meaningful. Obviously, Donald Trump saying ahead of that, I'm not going to preemptively lift tariffs on China, but you wouldn't expect him to. China today saying we would like to get some tariff relief as a goodwill gesture as part of this. But you can imagine they're going to go into that conversation seeing a general framework again of understanding. This sets the way of how they're going to talk to each other going forward. At least there is a conversation happening. It depends on how well they gel in the minute. Again, personality driven meetings matter. So we'll see how that goes. But this is not going to produce a trade deal this weekend, but it may give us a little bit of a roadmap to how things will go going forward.
Ross, thank you so much. Ross Matheson there, our, of course, EMEA news director. Now, the Bank of England also expected to cut interest rates by 1/4 point today. But does a possible trade deal between the US and UK actually change the path ahead of the central bank? Well, our UK correspondent Lizzie Burton joins us now outside the BOE. So, Lizzie, does the potential trade deal actually move the needle in any way?
Well, it's thrown a spanner in the works, hasn't it, Francine? But the fact is the BOE has already voted, and it's unlikely that they will vote again, especially given that the press conference from Donald Trump is likely to fall after the BOE's own press conference. This is the view of economists I've been speaking to this morning. They also say that further out, it barely is going to move the needle for the economic picture in the UK. Ros just talked about how this is probably setting up talks down the line, but more than that, it's unlikely that 10% baseline tariff is on the table for this agreement. And if you even have the 25% tariff on cars and steel removed, you've still got a global landscape that is affected by this trade war. So I would expect Andrew Bailey, the governor, today to be still talking about this environment of elevated uncertainty. And unless this deal, if we get one, opens the door to more deals, you're still likely to see suppressed global demand, lower oil prices, disinflationary, and unless you get a deal with the US and China, you're still perhaps going to see China dumping cheap goods on Europe, including the UK. Again, disinflationary.
Lizzie, what sort of dovish signaling could we actually see around this expected 1/4 point cut?
Well, that 1/4 point cut is fully priced in by markets, unanimously expected by economists, Francine, because of the weight of Donald Trump's tariffs on growth and inflation in the UK. But that dovish signalling will be crucial. You may see at least one member of the MPC voting for a jumbo cut today, not just Swati Dhingra, the Archdove, but maybe we see Deputy Governor Dave Ramsden going for it. He's got form when it comes to pivoting the committee, and maybe we see Alan Taylor, the newest member of the MPC, going for it as well. Surely the market would take that as a dovish signal, even if Andrew Bailey says that we shouldn't. And beyond that, there is the guidance. At the moment, they're saying that the rate path ahead is going to be gradual and careful. They used the word careful because they wanted to take account of Trump's trade policy, but if they take careful away, perhaps it suggests that the risks are balanced more towards growth and a slowdown in growth than a rise in inflation. And if they take away gradual, perhaps that opens the door to a June cut as well. And that would be the first set of back-to-back cuts we've seen from the BOE since COVID, and before that the financial crisis. So a very, very different tone potentially from the bank than we got from the Fed last night.
Lizzie, thanks so much. Lizzie Burden there at the Bank of England. We'll bring you, of course, the rate decision at the slightly later time at 12:02 today, because of the 2-minute silence for VE Day. And then for viewers in the UK, we'll also have full coverage of Governor Bailey's news conference and a special broadcast starting at 12:15 p.m. We also are listening to Keir Starmer, who's just giving a press conference on defense. He started the press conference by talking about the trade deal, but by only saying you'll hear more from him later today on the U.S. economic deal. Again, he's also just said that he will act in national interest for workers and business. Now, for more on markets, the UK-U.S. trade deal, for how the Fed is reacting to Trump's trade policy, let's bring in Bloomberg's Justina Lee and Kokou Agbo-Bloua, Global Head of Economics, Cross-Asset and Quant Research at SGCIB. So thank you both for joining us. Kokou, thank you for joining us. I mean, there's just a lot going on, right? There's a deal, it's not a deal, maybe there's something softer. We heard also from Jay Powell yesterday. What do you think is driving markets right now?
Well, I think the market has pretty much unwound most of the risk premium after Liberation Day on April 2nd, when you look at the equity markets and some of the credit markets. But one of the key factors that haven't completely recovered are the dollar, which is roughly down 10% from its peak. You have the oil price that's also under pressure, and then in volatility to some extent. So I think the market is trying to find where the equilibrium is. And ultimately, it's really around game theory. So Pareto optimal equilibrium is where both sides get what they want. And the key point from our perspective is that the current situation is not an equilibrium. So there's pressure, and the path of least resistance in our opinion, is for a deal or a ceasefire to occur before July the 9th, which is the next key date.
Which is the next key date. And this is actually what Jay Powell also had to say on tariffs yesterday.
There's a great deal of uncertainty about, for example, where tariff policies are going to settle out, and also when they do settle out, what will be the implications for the economy, for growth, and for employment. I think it's too early to know that.
Kokou, is the market too optimistic on tariffs right now?
Well,
or
I
too
think,
pessimistic?
Well, okay. I think there's a quote that says a pessimist is an optimist with experience. But I think markets.
I love that quote.
But I think the market is clearly more on the optimist side, trying to see a sort of light at the end of the tunnel kind of situation, given how Trump has backtracked from the reciprocal tariff.
Justina, what are you looking at? Again, we could get a boost on UK assets if there's something substantial with US-UK. But at the moment, it could be, an understanding that they'll work closer on certain sectors. So again, we're lacking news and clarity.
Yeah, exactly. And I think you see kind of markets kind of pouncing on any hint of good news. So we have kind of UK stocks kind of rising higher today, and even the sterling is a bit higher. And I think that kind of reflects a bit of optimism that, this is going to be, this is a trade deal that, at least in the UK's case, has been kind of a few years in the making and might be a template for other deals going forward. But I think one key consideration here is President Trump actually responding to a lot of the polls that we're seeing out of the U.S., which shows that the confidence in his handling of the economy is falling. And I think that is sort of the key point here, because at least from kind of previous, his first term, it does seem like he's someone who kind of wants to remain popular and actually does care about the markets. And, has this changed this time around? Yeah,
I guess the question is does that change his policies completely, or do they just lay dormant until he can reenact them? And again, the perception of the markets on that will change pricing.
Right, exactly. Because this time around, he does seem like, he's a bit more dead set on his path. And that's because sometimes it's not just about him. It's also about the people that, he's put around him. And they seem a bit more kind of like hell-bent on this path they're on. And, we're kind of seeing this uncertainty playing out, in the Fed's case, because the Fed's basically in a holding pattern because they're worried about stagflation. But for the moment, they can kind of afford to wait it out because U.S. economy still looks pretty solid. But it all depends on whether the U.S. gets these trade deals, whether we kind of see these tariffs go back to kind of earlier levels.
And Kokou, the big one is, of course, U.S.-China.
Yeah,
do you expect, I mean, the fact, as Roz was saying, the fact that they're sitting down and actually talking about it is a positive news, but what do you expect out of it?
I think they will clearly expect some sort of gradual agreement to sort of ceasefire in terms of the tension we are in today. It is not sustainable to have the two largest economies in the world to be essentially fighting each other. So I think the other very important point is the power dynamic that's happening. So global companies, multinationals, multi-trillion-dollar companies have huge influence in terms of the political system in the U.S. If you look at how a presidential campaign cost something like $1 billion. So these multinationals, and we see that with the CEO of Apple and all these big national, putting pressure on the White House, on Scott Bessent, etc. So I think this is pretty much what's also happening behind the scene before a U.S.-China trade deal to occur.
Yeah, and on a lot of these chief executives, earnings are a bit fuzzy because forward guidance is so difficult to give, Justina.
Right, exactly. I mean, we've heard from kind of some executives about the impact of tariffs, and they're definitely worried about that, especially in more kind of export-oriented sectors. But you're right. I mean, going forward, kind of how do you plan for that? And I think that is the challenge that we're seeing right now.
Kokou, when it comes to central banks, so we heard yesterday from Jay Powell. Today we have Bank of England. The Bank of England is actually getting quite a lot of pushback. Anna Edwards also messaged, I mean, she had someone from Morgan Stanley say, why are they at 4.5%? I mean, is there really, does growth or inflation get hit first, basically, because of the tariffs? Yeah,
I think as you discussed in your previous discussions, trade wars are deflationary because there's an excess supply that needs to find a home. And it will be transitory in the U.S. in terms of high price impact. But I do think central banks have a put option, and they will exercise it when they see clear evidence of lower growth and lower inflation. And I think it is the case of what we see today when it comes to service price inflation, for example. That was the stickiest part. And with the oil price going down, so the path of least resistance will clearly be for a cut. That being said, they may have to cut more aggressively if the evidence of more damage to the underlying economy is seen in the data in the next couple of months.
But it doesn't necessarily mean that the Bank of England is behind the curve.
No.
Is it cautious to be in a wait-and-see mode?
Yes, I think that's the right stance because monetary policy takes 3 to 5 quarters to have an impact on the economy. So you really need to be sure of the evidence before cutting, because if you make a policy mistake, then you lose credibility. And the biggest asset of a central bank, it's credibility.
Justina, I mean, every time I ask about gold or ask about crypto or treasuries, I mean, the behavior of these traditional safe havens Bitcoin isn't, but has been quite interesting because they've been behaving quite peculiarly.
Yeah, exactly. And one thing that's been really interesting because is for a while, during the April market volatility, long-end treasuries don't seem to be such a great hedge to stocks right now. And so I think a lot of investors are kind of wondering, what else is a good replacement? Because even hedge funds weren't doing that well. And I think that really is the debate here. And I think another key point to look at is, we've seen U.S. stocks recover, but does that mean international capital is as enthusiastic about investing in U.S. stocks as they once were? Or are they kind of really looking at Europe again because of kind of all these new fiscal commitments and maybe more investments coming to this region?
Yeah, what's your take on Europe? Again, if you look at protectionism around the world, Europe has a tricky balance to pull off.
I mean, this is why I usually quote the great philosopher Mike Tyson, who once said, everyone has a plan until they get punched in the face. So a lot of the investors we talk to are clearly seeing the fiscal stimulus and the 1 trillion plan, etc. However, the gravitational pull of the the process it takes to get anything done in Europe is something that is keeping clients and investors on the back foot. So we'll have to see whether this drives productivity growth, etc. Because, as you know, the Draghi report shows that from 2040 onwards, Europe will lose 2 million people a year in terms of demographics. So this is why essentially productivity gains, investing in digital, etc., is a matter of survival for the Euro project.
When do we know, actually? I mean, we know that the German Chancellor had a bit of a setback, digital vote, but then now he's Chancellor, everything's okay for the moment. I mean, they're expecting to spend quite a lot on defense. Is it 5-6 months to understand whether Europe can really get its act together, or will it take longer?
Yeah, I think it will have some evidence over the next 5 to 6 months because a lot of these commitments are real. So the rearm Europe is over 4 months, so this will clearly create more spending. The infrastructure plan in Germany is going to have clear evidence. We see growth in the Eurozone sort of stabilizing around 1%. But what we need is more kinetic energy to propel Europe to reach this sort of escape velocity from the low growth, low momentum it has been suffering for the past few decades.
Okay, thank you both for joining us. Justina Lee there from Bloomberg and Kokou Agbo-Bloua from Societe Generale Corporate and Investment Banking. Now coming up, Bloomberg learns the Trump administration is planning to scrap some Biden-era AI chip curves. The details on our scoop next. This is Bloomberg. Welcome back, everyone. Now, Bloomberg has learned that the Trump administration plans to rescind some Biden-era AI chip export curves. Now, this comes as the U.S. and China prepare for trade talks this weekend. Let's bring in Robert Lee, a senior analyst at Bloomberg Intelligence. Robert, as always, thanks so much for joining us. So what actually prompted the policy reversal?
Okay, well, the original legislation was arguably a little bit rushed. It was put forward in the final days of President Biden's tenure. And it was quite broad brush in nature. Again, I think it lacked focus. And so what Trump and his team are trying to do is obviously potentially scrap that proposal and come up with something that's more laser focused, obviously more focused on its main rival in the AI sector, which is China, and to avoid collateral damage to maybe some friendlier nations or nations which the US is on friendlier terms with and sees good opportunity to sell its AI technology into. And by that, really, I'm referring to countries in the Middle East, particularly states like Saudi Arabia and the UAE, for example.
So, Robert, could this actually be a positive for China tech?
I think in the near term it could bring some short-term reprieve, but you know, global AI is a two-horse race between China and America at the moment. Plus, you've got the trade war and growing, geopolitical tensions, to state the obvious, between the two superpowers. So I think the direction of travel remains clear. We're going to see a likely further tightening of restrictions on China's access to leading-edge technology, whether it's NVIDIA chips. And you saw, a few weeks ago, the ban on the H20 NVIDIA chips in China. You'll probably see a further tightening of restrictions on advanced semiconductor fabrication equipment. So again, maybe Trump and his administration putting more pressure on ASML and European suppliers or Japanese suppliers on that front. So I think that's the direction of travel. That's unlikely to change. But again, it's to try and avoid the collateral damage, if you want to put it that way, on countries who are sort of in the middle, particularly Gulf countries. I think the UAE in particular is looking to invest, several hundred billions of dollars, potentially over $1 trillion in the next 10 years or so in the AI sector. And that is an enormous opportunity for US tech platforms and US tech providers like NVIDIA. And coincidentally, I think as has been mentioned earlier in the program, Trump's taking a trip out to the Middle East in the next week or so. So I think we're going to see more headlines, I would imagine, in the coming days.
And Robert, meanwhile, we've actually had some alarm bells for the chip sector from ARM.
Yeah, ARM, when it was a UK-listed stock, was referred to as a sort of canary in the coal mine because it's involved on the development side of the chip sector. Having said that, what ARM is saying, and their guidance was at the lower end of the range, and they declined to give full year guidance. But that's a similar story to what we've heard from other chip stocks, whether it's Samsung, Hynix, and others. I mean, the world is, to state the obvious, a very uncertain place at the moment with tariffs. You've got new tariffs put on one day and then walk back the next. It's a very, very difficult environment for any company, whether they're semiconductor or elsewhere, to have a firm view, even for their own internal budgeting, let alone giving external guidance to investors. So ARM's message, an uncertain message, was not different for what we've heard from others. But obviously the stock price did take a hit overnight.
Robert, thanks so much. Robert Lee there from Bloomberg Intelligence. Now, Apple says it's actively looking at revamping the Safari web browser on its devices to focus on AI-powered search engines. Now, the move marks a seismic shift for the industry, hastened by the potential end of a long-time partnership with Google. Now, a senior Apple executive says AI search providers will eventually replace standard search engines. And the Chinese President Xi Jinping is meeting the Russian president in Moscow, where he's on a 4-day state visit. Now, China has maintained close ties with Russia despite the conflict in Ukraine, and talks between the two presidents coming amid the trade war between China and the U.S. Well, let's get more now from Bloomberg's Russia government and economy editor, Greg Sullivan. Greg, thank you for joining us. So what exactly is the purpose of this visit broadly, and what do we know about what's actually on the agenda?
Well, in many ways, this is a chance for the two sides to really demonstrate their partnership, their deep commitment to one another, and the continued cooperation that they have. Now, from the Russian side, that also helps demonstrate that they are not globally isolated, despite Western sanctions and Western attempts to cut them off from the global system. For the Chinese side, they've increasingly looked at ways to upend the U.S.-led global order, and this is another chance for that. Now, that being said, there are some concrete items on the agenda in the talks today. One will be the war in Ukraine, how talks around that are going. Another item on the agenda will be U.S.-Russia talks. This is the first in-person sit-down since Donald Trump, between these two leaders, since Donald Trump unleashed his trade war. So expect them to focus on ways that they can coordinate responses to Donald Trump or to share information about responding to him. Another item that will be on the agenda is the proposed Power of Siberia 2 pipeline. That's something Russia has long sought after, but there's been some sticking points. So that is on the agenda, something concrete there as well today. We know that there's a unilateral 3-day ceasefire Putin has declared. Where do we stand on a longer-term truce, Greg? Well, that's right. Early in the Trump administration, we heard a lot of talk about ending this war swiftly. We heard that the Trump administration wanted to end it within the first 100 days of the presidency. And there was a lot of talk about coming to the table and trying to hash out an agreement. But as you said, Putin has declared a unilateral 3-day ceasefire. Ukraine has not said that it will reciprocate it necessarily over these Victory Day commemoration celebrations that are being held in Moscow. But that falls far short of the 30-day ceasefire that the Trump administration had sought, or any longer-term truce. Basically, at the moment, there are a lot of sticking points. Moscow has been making a lot of demand. We've seen that the White House has actually expressed frustration. They've threatened to walk away from the deal. We've heard from Vice President J.D. Vance that potentially Moscow was demanding too much in these negotiations. So right now, they do seem to be at a standstill. And it does appear that Moscow seems to think that they have the advantage on the battlefield and that they can basically delay any kind of truce.
Thank you so much, Bloomberg's Russia economy and government editor Greg Sullivan. Coming up, we'll be speaking to the Novonesis chief executive Ester Baiget as a company reports earnings. That's next, and this is Bloomberg. Well, good morning, everyone. Welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Bloomberg learns that Donald Trump is set to announce a trade deal between the U.S. and the UK later today. Well, the Bank of England expected to cut rates this lunchtime after the Fed signaled it's still in no hurry to ease. Plus, Vladimir Putin hosts leaders, including China's Xi Jinping, as they seek to challenge the U.S.-led world order. Now, Danish biotech firm Novonesis has released first quarter earnings in line with expectations. The company has also maintained its revenue forecast for the full year. Well, Ester Baiget, the president and chief executive of Novonesis, now joins us. Ms. Baiget, thank you so much for joining us. I mean, there's a lot going on in terms of tariffs and production and how you could be impacted. Do you have a lot of local production, including in the U.S.? Does that mean that you're 100% clear of any threat from tariffs or trade wars?
Thank you for this beautiful intro and also question. We started the year in a very good and strong mode. We delivered 11% sales growth, and that puts us in a good place of comfort. As you so nicely mentioned, we have a broad global footprint with also strong presence in North America. So mostly everything that what we sell in North America, it's produced in North America. And then we also have a resilient and very versatile product mix, an asset footprint. So we are having the ability to adapt and bring flexibility to in alignment also in response of the tariffs. And also with pricing, we feel very comfortable and we are in a good place with expecting for the direct impact from tariffs, either none or very, very, very marginal net impact from tariffs to the bottom line. Having said that, we're watching the dynamics very, very carefully. We live in a dynamic world where we see also changes on, particularly in US, on the consumer confidence. Maybe also EIA in North America, the trading, the EIA Association has indicated that the gasoline demand would drop from 1% to now flattish, the expectations for the year. We don't see any changes on our customer orders. We have a really good start of the year, a very good Q1, but we're also watching the situation very carefully. And all in that puts us in a good place for reconfirming our guidance. You said that, of both top line, but also bottom line of 37 to 38 EBITDA margin. And that's including also the negative headwinds from currency.
Esther, can you give us an update on your bioenergy unit? And has it changed given the Trump administration view on sustainable energy?
Actually, the opposite. We see extraordinary momentum with our customers. If anything, the administration has already put in E15 waivers for summer earlier. Today, US is using 10% has a mandate of using 10% blending of gasoline-based demand from bioethanol. The market uses more, showing the competitiveness and the strengths of the bioethanol relative to gasoline. And typically in summer, there is a waiver for moving into 15%. And that has already been implemented and put in place earlier, showing also the belief and understanding from the government on the value that bioenergy in. Don't forget that it's not only, yes, it's good for the planet because it drives lower CO2 emissions, but it also drives local jobs, local wealth. And it builds perfectly on security, national security, for decoupling from the need of other sources of energy. You don't need import chips to produce solar panels to make bioethanol. It's based on North America raw materials, and it drives North American local jobs. And that we see that momentum very strongly.
I know you've recently actually announced a deal with your partner DSEB, Finmerish, but after that goes through, will you be ready to spend a little bit more on M&A?
One step after the other. I love that question. We combined two beautiful companies creating Novonesis. That was only a little bit more than a year ago. Then less than a year, we also put the acquisition, as you mentioned, of our fair share of the other part of the alliance from DSM, Firmenich, and bringing enzymes home and creating a stronger channel to market for our animal health and customers in space that we see value and that biosolutions bring in. And we are committed to deliver first the 5 to 8% growth for the year, mainly from volume, mainly from growing with our customers, bringing value solutions for our customers. And of course, we're always going to look at M&A, but that's not our main focus at this moment.
What are the organic growth prospects actually for the business? In particular, how are your clients dealing with low consumer confidence? Is this something that could stay longer term, or is it just a bit of a hiccup for the moment?
We're watching the situation very, very carefully and very, very, very closely. We see the trends on food, on health, on high protein, on clean label, of low sugar added, of no salt added, as strong as ever. This, we don't see any changes in consumer dynamics. We don't see any changes in household care with the solutions that we bring to our customers and the order pattern. It's true that we see changes on the consumer confidence decreasing, only particularly in US, and that's what we're watching very carefully on any potential evolution then, including also in our guidance. We talk about bioenergy in North America, really also solid momentum on bioenergy outside of North America. Growth in Brazil, growth in India, growth in emerging geographies, also from biodiesel, where we see a shift from the chemical processes to the more flexible, resilient, and ductile enzymatic processes, and that's driving also demand. So lots of diversification from a geographical perspective, but also from a mixed perspective. And all of that together, coupled with our global asset footprint, gives us the comfort on the 5 to 8 guidance that we reconfirm.
Esther Baiget, thank you so much for joining us. That was, of course, the president and chief executive of Novonesis. Now, the German chipmaker Infineon has cut its outlook, warning of a potential hit from tariffs and currency fluctuations. Revenue for the current quarter will also miss analyst expectations. Well, the chief financial officer, Sven Schneider, spoke to Bloomberg's Guy Johnson a little earlier.
We do not see anything of a tariff impact in our numbers yet, number one. Number two, we do not get any feedback from our customers, which leads to that belief. So that's the baseline. Now, there are two things which we had to deal with and which we have baked into our forecast. The first one is currency. The dollar is much weaker. We had previously guided for 105 euro dollar. Now it's between 110, 115. Honestly, I don't know where it will be. So we just took 112.5 as a midpoint. That gives us a give or take 400 million revenue headwind in the second half. And then there is the tariff uncertainty. And I repeat and stress the word uncertainty. We believe it's likely that there will be a negative impact on demand in the next quarters, although we do not see it in the numbers yet. And therefore, we have made a guesstimate. It's no calculation because we don't have the data. It's a guesstimate of a potential impact. And we guesstimate that at 10% of our Q4 revenues, which translates, give or take, into 400 million. So if this is coming, yes, then we include that in our guidance, and then the guidance compared to last year is slightly below, indeed.
Well, that was the Infineon chief financial officer, Sven Schneider, speaking to Bloomberg's Guy Johnson. And Maersk has also lowered its forecast for the global transport market in the wake of Donald Trump's trade war. Now, the Danish shipping giant had forecast growth of around 4% for this year, but now says it expects between 1% contraction and growth of 4% at the high end. Now, the chief executive, Vincent Clerc, told Bloomberg that the tariffs have already taken a big chunk out of shipping volumes between China and the U.S.
We've seen drops on volumes from 30 to 40% on these corridors, in both directions, actually, as the trade war really heated up. This seems to have found a plateau today, but I think what is happening is for a lot of those products, there is no easy substitution outside of China or outside of the US. So what is really going to be interesting to see is how long can each side actually live on the inventories that they have? How much can they substitute from other origins? And also, how much is their demand for the goods going to be affected if we see inflation as a result of this, obviously this could have an impact on volumes and could increase the chance of recession in the United States. So those are all risks that we're actually closely monitoring because it will have a big impact on how the second part of the year will look like from a volume perspective.
Well, let's get more on all of that and some of the other big earnings today with Bloomberg's Charlie Wells. Hi, Charlie. What do you have?
Hi, Francine. So it really is this interplay between shipping and defense and kind of how these industries have been navigating the trade war. So Maersk, of course, they had a pretty solid report, but what investors have really focused on is that year forward, given the trade tensions that we're seeing, we know that last year they had solid profit growth, but the estimations for this year ahead are not good, as you can see on the screen behind me. And part of the reason why is that shipping rates are going down. So the amount that it costs to ship a 40-foot container from Shanghai to Rotterdam, so important for European trade, that amount has gone down from a peak last year. Now, some of this has to do with some of the tensions that we've been seeing in the Red Sea. We heard earlier this morning this Maersk CEO talk about how he thinks some of those tensions could continue in the year ahead, and that brings us to defense. A lot of the earnings that we're hearing this morning are from that defense sector. We had a beat from Rheinmetall, and if you just want to step back and take a look, 5 years ago to today, Rheinmetall's share price up 2,300%. 300%, more than that. And that just speaks to a lot of the optimism that investors have about these companies, these European defense companies, as European defense picks up. But the question is, can this continue? You see a lot of optimism across the sector. We've got Leonardo reporting later today. They have seen a lot of optimism year to date. But I think the question is, investors know that European defense spending is up. We've seen across the board defense spending up by the most since the Cold War. How much more upside do these companies have as this is already potentially priced into their share prices?
Charlie, thanks so much. Charlie Wells there with Very Late on some of the earnings and also what they've done year to date. Now, coming up, we'll look ahead to the Bank of England's interest rate decision due this lunchtime with Vanguard's Jumana Saleheen. This is Bloomberg.
The whole theme everybody's been talking about and Powell answered in multiple ways is we don't know and he doesn't know, and it's heightened uncertainty. So you need more balance in your portfolio.
We are almost certainly going to have supply chain disruptions even if we were to resolve this tomorrow, because a lot of ships from China aren't landing here at port, coming to port here. Supply chain disruptions to some degree are almost inevitable.
It's management teams, again, not wanting to overreact, not wanting to have those really tough conversations with their suppliers where they're demanding a discount. Not wanting to have those tough conversations with their customers, trying to push on price.
Yeah.
Because that can burn bridges, and you find out in a month's time policy changes, and you've made all these changes for no reason.
This has been an extraordinary year, especially given the extent of the uncertainty. They're not pulling back, they're just being cautious, but they're being cautiously optimistic.
Executives there at the Milken conference in LA reacting to the Fed holding rates. Now, the Fed chair, Jay Powell, says he will not be rushed into lowering borrowing costs until there's more certainty on the direction of trade policy. Meanwhile, here in the UK, the Bank of England is widely expected to cut rates. Let's get a roundup of the central bank action with Ven Ram from Bloomberg's MLive team. Ven, thank you so much for joining us. As always, on the Fed, I mean, is it the right decision? They basically want to wait and see. It's a little bit maybe too premature to move, given things need to settle on trade and tariffs.
Morning, Francine. So good to be talking to you. Yes, I think that the Fed was the right call from the Fed. I think that they are in no hurry to cut rates. The reason being, if you look at shipments from China to the US, they've plummeted in recent weeks, and that lays open the prospect of empty shelves in supermarkets in the US. That in turn means higher prices. How much higher? If you look at the break-even rates, Francine, if you look at the one-year break-even rates, they are telling. Just in September, the markets were pricing 50 basis points. Now they're thinking the inflation over the next 1 year is going to be closer to 3%. That's a humongous jump since the time the market started pricing in a Trump presidency. So all that means that the Fed has to wait. They don't have a choice, which is why I think that there is a bit of mispricing going on. If you look at the overnight index rate swaps, and if you look at Fed fund futures, they're thinking that the Fed is going to be able to cut rates at least 3 times this year. I think that's a bit of a pipe dream. I think we would be lucky if they cut twice.
Okay, so interesting. Ven, what about the Bank of England? Again, we're expecting a cut, but actually the outlook for the economy has really dramatically changed since last March. Some people think that, Governor Bailey's behind the curve in cutting. Do you agree?
Well, I don't know if he is behind the curve, because if you look at inflation break-evens again, Francine, they were at 4% 1 month ago. They are now at 360. That is way above the Bank of England's inflation target. So there has to be some caution from the Bank of England, which is what Andrew Bailey has rightly been pointing out. I think that, having said that, I think that there is a chance that they are kind of going to be dovish today because of the reasons that Megan Green pointed out in this very program to you, Francine, just weeks ago, that the trade barriers are going to be deflationary for the UK. And for that reason, I think that the Bank of England may think that, may project lower inflation, and therefore that gives them wiggle room to cut rates today. That, of course, is a foregone conclusion. But what happens, whether they will be able to cut rates again in June, is going to be the most pivotal thing coming out of the BOE today.
Yeah, and then, it's just a big day in general, right, for policymakers, because we have Sweden, Norway, and the UK looking at rates. What does it mean for possible opportunities when it comes to bonds?
Well, I think that, the terrific sweet spot, I beg your pardon, in bonds is a German bonds. If you look at their yield, it's not so compelling on first sight. But if you look at the currency hedged yield on German 10-year bonds, they're offering you a pickup of something like 230 basis points above the nominal yield. So that means you can lock in a 10-year yield of 4.85%. I just put out that research yesterday. It's available on the terminal, and I think it's a fantastic trade for those who are thinking that, where else are you going to get contained inflation as in the Eurozone, plus a central bank that is willing to cut rates again. Therefore, I think that the best opportunity in the bond spectrum at the moment is in bonds.
Thank you so much, Van Ram, there, of course, from our markets team, looking at some of the central banks deciding today. Now, in just over 2 hours, the Bank of England expected to cut interest rates by a quarter point. Joining us now, Jumana, Saleheen, a chief European economist and Europe head of investment strategy group at Vanguard. Jumana, as always, thank you for joining us. It's a big day, actually, to listen to Governor Bailey in terms of how dovish they are, right? Because it is a new reality that we're seeing since they met in March. If we get some kind of trade deal with the U.S., how does that complicate the thinking for the Bank of England?
So I think that the details are yet to be seen, but from what we know now, the trade deal is about tariffs. So the level of tariff, the headline rate is 10%, and there is additional on steel, aluminium and cars. So can there be carve-outs with respect to that tariff? Mm-hmm. So big picture, this is good news. But don't forget that tariffs previously, so back in 2024, the average tariff rate for the UK, the number was 2%, and the headline is 10%. So what we're looking at is to bring that 10% down, maybe to something, I don't know, we'll find out the details, but in our base case view, we're thinking something like 7 is where it would settle. Mm-hmm. So still, the 7 is higher than the 2, but there's a lot of uncertainty out there, and we know that that uncertainty hurts confidence, businesses and consumers.
Yeah, and it feels like it's hurting. This was the big question right before we actually saw it trickle through the real economy. Does it hit GDP faster and with more force than inflation?
Yes.
Does it change if it's 4%? Does it hit inflation at the margin? But does it boost kind of confidence?
So I think it's, you're absolutely right. Look, it's very hard to know where it's going to show up and how it's going to show up, but we've seen it in the soft data, and the question is when or if that soft data will actually feed into the hard data in the GDP. But that aside, if you look at the UK economy, growth has been pretty weak. If we look back the last 2 quarters, the second half of last year, and the early indicators, January was weak, February a little bit stronger. But I think on the transmission mechanism, I think consumers are also facing that uncertainty, processing that news and saying, what does this actually mean for me, for a company? What does it mean for jobs? What does it mean for investment? And big picture, we have seen that jobs growth slowing. Mm-hmm. So there's definitely evidence that the economy, both on the growth side and on the job side, is slowing. Yeah. And inflation, while it's high right now, we expect it to be coming down.
But there's a sticky inflation, right? That kind of, is there, again, I use the word stagflation quite sparingly, but do you worry that we're in a situation where it just gets really tricky for the BOE?
I think it's not as tricky for the BOE as it is for the Fed, right? So the Fed definitely will see those two sides of the mandate pulling in different directions. In Europe, in the UK, it's a very different picture, unless you have reciprocal tariffs. So if we did a reciprocity, that would push up our inflation. But otherwise, you get the global weakness, global uncertainty, which pushes down on global growth, which ultimately brings that inflation down. And even without tariffs, we did see that inflation was coming down, wages are coming down, but absolutely, as you said, sticky.
Jumana, one of the other things we're trying to figure out is really when you look at the prospects longer term for the Bank of England where the neutral rate is. It's really difficult to get actually a member of the MPC to honestly say. Do you have any, is it at 3.5%? Because that also changes the variables of maybe where you expect interest rates to go from now until the end of the year.
Yeah, so you're absolutely right. It's difficult to measure it. There's uncertainty. We do have a measure out there, and we're quite open about neutral rate estimates globally. We think it's 3.5 is what we think. So we do think that the bank will cut rates more this year. So they cut today and cut another 2 times this year, taking the interest rate down to 3.75, which would be close to neutral, and they'll reach neutral next year.
Is there anything else? I mean, what's the one question you'd ask Bailey today? If you know, on the trade or how he sees, we could get a vote that's 8-1 today. How difficult will setting monetary policy be from September onwards?
I think the key question really is thinking about, you know, how are they modeling the trade policy uncertainty? We may see some scenario analysis. We may see how that's being factored in to their forecasts further out. It's obviously incredibly difficult, but that's kind of what I'd be most interested to hear about.
And again, you were talking about this juxtaposition between, you know, the Fed and the BOE. Do you think they look at this divergence? Again, I know they push back a lot and saying, you know, we set interest rates for the UK, but you have these opposing forces that might skew them.
Yeah, no, I mean, they have to look at global factors, right? Because we're a small open economy, we will be affected by those global factors. And the key transmission really will be through the currency. So if, you know, the US is on hold, if we're cutting, we see that currency differential. We'll see that interest rate differential be reflected in the currency. And ultimately, you know, if sterling goes up, that's also going to push down on inflation. So there are mechanisms which ties it together.
How dovish do you think the BOE will be today in terms of language? So after the cut, and what does it mean for gilt?
So I think they will try to strike quite a neutral tone. I don't think they'll necessarily, they're not in a position yet to be like signaling that, oh, you know, rates are now moving in this direction or any kind of forward guidance. With that respect, I think there is still a lot of uncertainty out there with respect to trade policy, and we can't underestimate that. You know, if you look at the numbers in terms of tariffs now, I know we've got the 90-day pause and there are various trade deals, but they're close to 30%. We've not seen those tariff rates since 1900, and we don't know where they're going to go. Our base case view is that they come down towards 20%, but I think that's why none of the policymakers can be dovish or send like clear signals on where things are going while we navigate this uncertainty and get a bit more clarity as to where we're going.
Yeah, very quickly, because I know we're almost out of time. But again, the US-China trade relationship will also have an impact on the UK, and the lower energy price is a huge factor for them as well.
Yes, so that's right. So there'll be an impact through energy prices, but also we know that the headline tariff rates are higher, so there might be cheaper imports from China into UK and Europe.
Jumana, thank you so much for joining us. That's Jumana Saleheen, their Chief European Economist at Vanguard. Now, of course, we'll bring you the Bank of England's rate decision just after midday today. For viewers in the UK, we'll also have full coverage of Governor Bailey's news conference in a special broadcast starting at 12:15 p.m. UK time. And then we'll be speaking to the governor. You can catch that interview from 4 p.m. UK time. Up next, Bloomberg Brief.